Good afternoon. Welcome everyone to today's webinar. Um, my name's Kazi. Now, I'm a senior business consultant here at Lawpath. I've been here for a couple of years now. So, yeah, look, welcome to today's webinar. We're going today's topic is pretty much, budgeting for small businesses across Australia in 2026. And it's going to be presented by one of our senior accountants here, James Pham. Now, once again, welcome to everyone. Um, before we jump into this, those of you who are new to Lawpath, a little bit about what we do. Um, we've been assisting small to medium-sized businesses across Australia for the past 11 years here. So far, we've helped over 600,000 businesses across Australia. And we're very proud of the fact that we've saved over $500 million in legal and accounting fees since then. Right? We've got over 10,000 over 10,000 five-star reviews, which are all verified there as well. And basically what we do here at Lawpath is we're smart and simple, provide smart and simple legal and accounting solutions for small to medium businesses. We can help you with creating any legal documents, providing legal advisory and an accounting advisory service. And we're all in one pretty much platform that can help you connect with lawyers and accountants in a nice and easy and affordable way. Now, I'll introduce James, which is our senior accountant here at Lawpath. He's got over 12 years of expertise in business services and tax advisory. And look, he's really, really well versed in advising businesses on tax planning, structuring, compliance, and financial strategy. Now, having worked with both mid-tier and boutique accounting firms, he helps businesses really optimize your tax position, and particularly he enjoys management accounting and financial reporting. So if anyone's had an issue like this before, or you want to have a further chat post this call, please let us know. We can definitely schedule a call with us afterwards. So just chuck a yes in the chat. Let us know if you want to discuss further. More than happy to reach out and see how we can actually assist with your business. Now, just so you guys are all aware, this webinar will be recorded and we'll be sending out a copy of the slides for yourselves, our plans, our partner offers, and there'll also be a video recording of the session for you guys to watch it post-webinar as well. Now, if you guys do have any questions throughout the webinar, just feel free to put it in the Q&A and we will address it at the end of the session. So look, without further ado, take it away, James.
Good afternoon, everyone. Can everyone hear me? Awesome. Great. Like Kazi said, I am a chartered accountant. I have 12 years in the chartered accounting space. I've worked with a lot of tax, and I've also done a lot of management reporting for clients as well. So a lot of budgeting, a lot of forecasting, a lot of cash flow analysis as well. So I am placed well to present this webinar to you all. Just a bit of housekeeping. If you have any questions, feel free to pop them in the chat. I'll see them, and if it's an easy answer, I'll answer on the spot. If it's a bit of a longer explanation, I'll wait to the end. So, so feel free to pop in your questions as they come to your head. All right, so the things we're going to cover today is basically putting together a budget for your business. So as people or individuals, we budget our personal lives, right? So we need to budget money for rents and mortgages and groceries and all that sort of stuff. And it's also important that you do that for your business as well. So understanding a business budget, there are quite a few things you need to understand in order to put one together. And what a budget really is, it's a plan for your business, essentially, a strategic map for the outlook of your business. So this is a good time to have this webinar because we are approaching the end of the financial year. So we have a bit of data to look at that we can base our budgets on for the next financial year. Ideally, this process will take place in around April and May, and then finalize the budget in June so that we're ready to go come 1 July. Okay, so why is having a budget in place important? Okay, so it reduces panic. So the way it reduces panic is it reduces the surprises, right? So I imagine as a business owner, you don't want any surprises when you are running your business. So the process of running through a budget is a very thought-provoking exercise. It can be quite confronting, if I'm being honest, but it really does provide a lot of clarity moving forward and the direction you and your business want to head in. Okay, so by going through this process, you gain control and understanding of your numbers and what you want to achieve, and through this, you are able to make decisions and also potentially foresee any problems that may occur. Okay, so that's the whole purpose of a budget. Okay, so first thing we're going to talk about is building a basic business budget. I will say that putting together a budget, it does not need to be complicated. So the simpler it is, the better, because you want it to be usable, you want it to be readable, and you want buy-in essentially for all stakeholders of a budget. So whether that be your management team, yourself as a business owner, staff members, you want it to be digestible and have buy-in from the entire business essentially. So on that point, so really digging into sort of the main things a budget achieves. So again, it is a forward-looking plan. So essentially what you're doing is estimating income and expenditure over a specific period. Generally, we budgets are done on an exclusive of GST basis. So it is a purely profit and loss exercise. So we don't really take into account the balance sheet or cash flow movements. So it's essentially a P&L projection into the future. Generally, you prepare a budget for 12 months, and it's on a month-to-month basis. Okay, with this sort of stuff, there is always a level of assumption that is going to be used. So you start off with historical data, whether that be the last 12 months or the last 10 months in the financial year, and using what you've already achieved, you put into place projections for income and expenses. With that, you also you need to look at things that will happen potentially. For example, bringing on new employees or tapping into a new lead source, and things like that, to justify your projections. Because what you don't want to do is just put your finger in the air and just pull a number out of nowhere. There should be some level of logic behind your projections. Okay, a budget isn't set and forget. It's meant to be looked at on a regular basis. So whether that be a frequent or regular cadence of meetings to review the budget and review actual results as they happen. So I generally recommend at least a monthly review of your budget and a monthly review of your actual results and compare the two. That's you may have heard the term a monthly management meeting or a board meeting, for example. That is going a budget, and the actual results will build the foundation for those conversations. Okay, and the last point again, keeping it simple and really using it as a reporting tool on a frequent basis in order to get the most out of it. Okay. Okay, so key information that goes into a budget. So when we look at a P&L, you have revenue at the top, cost of goods, operational costs, and then profit at the end. So let's start at the top here. Projected income. So the first thing you need to predict or project is your income. So looking at things like your sales pipeline, your any future marketing campaigns that you are looking to implement, reviewing your sales data as well from the previous 10 months or 12 months, and then also any seasonality patterns that you identify in reviewing your data, that will form the basis for your income projections. So whether with the sales as well, yes, it is an estimation, but it can also act as a goal, right? So you can also set your KPIs based on the budget essentially. So, for example, if a business if a business wants to increase the customer base, so maybe a KPI for the sales manager would be, 2 new conversions every week or every month, for example, right? And that can be built into the budget. So what does that look like in revenue? What is the average deal size there, and how does that affect the revenue projections? And you know, towards the end of the month, you can run the results and say to your sales manager, hey, you met your KPI, or you didn't meet your KPI, and there comes a conversation of incentives and all that sort of stuff. So it really does provide a good baseline for those conversations. Next, we have on the P&L, we have cost of goods. So those are generally variable costs, so costs that increase or decrease based on the level of activity or sales activity. So if for example, if you're a product-based business, the more sales you make, the more cost of goods you'll have in proportion, because you need to be able to produce that product in order to sell it. So as you project higher income or higher sales, you should also project higher cost of goods as well. Okay, so generally cost of goods are stock, materials, freight, that sort of stuff. Wages can also be variable costs if the employees aren't salaried or on a fixed salary. So taking into account any variable wages as well would need to be take part of the budget. And then fixed costs. So fixed costs are things that you need to pay regardless of activity. So things like rent, subscriptions, insurance, fixed salaries, for example. Those things are fixed, and you have to pay them regardless of whether your income increases or decreases, and also regardless if you make any income. So the fixed costs really determine your break-even point as well. So understanding your fixed costs and what they look like really sets the standard for the revenue that you need to bring in as a business. Okay, and then final points on what else a budget should include is any provisions for income tax, because if you're a profitable business, you will have to pay income tax at the end of the year. So putting in a provision for that as well, so that you can understand exactly, you can do things like put money away for tax as the months go along, so that you're confident towards the end of the year that you've put enough cash away for the tax bill that will eventually come. It's unavoidable, unfortunately, but if you plan for it, it becomes part of your budget, and there's no panic at the end of the year, because again, there's no surprise, because you've already calculated how much tax you've put away. So another thing I would mention is maybe a buffer for any unexpected costs as well. So maybe a miscellaneous expense provision or a general expense provision, just to provide a buffer for anything that may come up in the future. Let me just check if there's any questions so far. Okay, so a good question from Jamie. What happens if you're still in setup phase and income is non-existent? Well, that's actually a great. Then I would say that having a budget in place is mandatory then, because you will be paying for expenses that you do not have the income to supplement. So that means that money will have to come from a different source, whether that be through a loan, through a personal contribution from yourself as a director or a business owner, or whether you have to go out and get investors, right? So having a budget in place will tell you how much money you actually need. So you would have to sit down and look at all the costs that you need. So whether that be rent for an office space, for example, or you're developing an app and you need to pay some contractors to develop that app. Having that in a budget will tell you exactly how much money you need to bring in, or how much money you have to go find, whether that be from debt or equity financing. Hope that answers your question, Jamie. All right, moving on. Okay, so so just following on the point of creating the budget, like I said, everything is exclusive of GST. GST is not your revenue. I think we can all agree that GST is money that you pay to the government. You as a business, if you're registered for GST, you are a collection house for the ATO. You collect GST on all your sales, and then you remit that to the ATO. Okay, so how I would start creating a budget is I would open an Excel spreadsheet or a Google sheet and just start listing, everything down. So average monthly income, and then what your assumptions are for that income, whether that be units sold or whether that be contracts that you have in your pipeline, or potential contracts that you may have. Then you need to calculate the variable cost based on those projections. So if it's if you're a business that's selling products and you want to sell 1,000 units in July, well, what is the cost for that? So understanding your cost of goods, or understanding your gross profit margin is very important here, because you won't accurately project your cost of goods if you don't know what your gross profit margin is. So understanding that figure is extremely important. And then again, the fixed cost, that's a bit easier because they're generally repeating every month, whether that be a subscription or a monthly retainer for your accounting fees, or rent, or maybe you're on a payment plan for workers' comp or insurance. So those things are a bit easier to project, as they're usually a monthly cost. Okay, and last point, I'll just reiterate, reporting against the budget, at least on a monthly basis. So practically, I'll go into what that looks like practically later on in the slides. But again, just having buy-in from all stakeholders in the business, and reporting against the budget that the business has set is very important. Otherwise, doing a budget is basically pointless. We want to be looking at how we're performing based on the assumptions we made before the year started. And really, whether if things are going well, identify why things are going well, and then capitalize on that. Maybe you invest more. If your marketing spend is working out well, then maybe you increase your marketing spend, for example. Or if something is not going well, sales aren't going where they need to be, it allows you to sort of diagnose it as soon as the month is finished. So the thing is, if you don't diagnose the problem, it goes untreated, and then becomes a bigger problem. So yes, having a regular cadence to all this is very important. Okay, so common budgeting traps or errors or mistakes that I see quite a bit. A budget, yes, it is a strategic tool. Yes, it is a goal to reach, but it doesn't help if your projections aren't based on logic, right? So where I'm trying to go with this is unrealistic income projections, or unrealistic outflow projections in terms of expenses. It needs to be, you need to sit down and really understand what you want to achieve, and then put that into numbers, essentially. So a lot of clients set very ambitious income targets, and they go throughout the year, and the actual results aren't ever measuring up to the budget, and then that can lead to other things, such as motivation falling within the business, and all that sort of stuff. So really being honest and realistic about your income projections will really give you the best sort of outcome in terms of budgeting. The second thing I would say is forgetting, like I said, the month-to-month expenses are quite easy, because you see a direct debit coming out of your bank every month. It's easy to identify what that expense is. But for example, things that you need to pay on an annual basis, for example, insurance is a big one, or an annual subscription where it's a large cash outflow all at once. If you don't budget for that, then it basically throws off your budgeting reporting, because you're overstating your profit for a certain period. So really sitting down and thinking about what expenses will be incurred. So not just the monthly direct debits that come into your bank account, but also the big ones that come out at different points throughout the year. One of the biggest traps I see is clients looking at their profit and confusing that with cash in the bank. So there is always going to be a discrepancy, or potentially always be a discrepancy between your profit and loss and your profit figure and the actual cash in your bank account, right? That can be caused by multiple things, whether you've issued a bunch of invoices that haven't been paid yet, or you've received a bunch of invoices from suppliers that you haven't paid yet. Those all affect the P&L, but the cash hasn't actually happened in the bank account yet. So looking at your budget for a cash flow perspective isn't the right approach. A budget is more of a P&L reporting, exercise, and really basically a KPI for your business is what the budget is. Okay. And I'll touch on that cash flow thing a bit later, because I think cash flow is extremely important for a business. And you might say, well, why would I do a budget if it doesn't really account for cash? Well, there's uses for both, right? So I'll explain those later on in the webinar. Another thing I see is building a budget that's too detailed. You know, if it's too complicated to look at, you're not going to look at it, and your staff aren't going to look at it. So having a budget that's easily digestible by all stakeholders, and then having that buy-in from them as well is your path forward to success for this type of exercise. And then the last one, I've mentioned it before, but not reviewing the budget regularly. So, you know, if you at the beginning of the year, if you've budgeted for a certain amount of staff, but then you increase their staff, that means your wage expense will increase. So not changing the budget to reflect that will affect the budget moving forward. It will just show that you're not reaching your goals because you haven't budgeted this expense in. So yeah, updating and reviewing the budget regularly is important as well. All right, so I just want to touch on the difference between fixed and variable costs. I think I've already touched on it a bit, but here's a bit of a deeper dive. So fixed costs, what is a fixed cost? Again, like they say, they stay mostly the same regardless of the sales. They must be paid even if you're not making any sales. And if you're not bringing in the revenue to cover these fixed costs, it can create or lead to a cash flow issue, because you're not bringing in the revenue to supplement those fixed costs, and generally they're quite hard to get rid of quickly. So whether you're contractually obliged to pay a certain expense on a monthly basis, for example, rent, you're entered into a lease agreement, or again a subscription that's non-refundable, for example. So they are reviewing these fixed costs on a regular basis is also very important as well, and reviewing them before you go into the new financial year, and culling off anything you don't need or you won't see a return from it is a very, again, thought-provoking exercise and an important one. Variable costs are basically your cost of goods. They increase or decrease with the level of sales activity. The only time, and they should be, proportional to your gross profit margin. So if you sell something for $1 and it costs you 30 cents to make, your profit margin is 70%. And if that's your profit margin that you've budgeted for and you've thought about and strategically aim to achieve, then ideally that profit margin should be maintained throughout the year, unless something happens, whether the cost of a material or a cost of freight, for example, increases, then your gross profit margin will be affected, or whether you get a bulk discount from your supplier and it reduces the price of the raw material, then your gross profit margin should increase. But having a baseline and understanding of what your gross profit margin is very important in tracking and identifying when there's blowouts in your gross profit margin, which may indicate an issue operationally for the business. Okay. So understanding the difference between both, but more importantly, understanding your gross profit margin is very, very important when looking at reporting and budgeting and running a business, because your gross profit margin is essentially your rocket fuel for the business. If you can gain 1 percentage point in gross profit margin month on month, that has life-changing implications for the business. Essentially, that could lead to obviously more cash in the bank, and then that with that money you can use it to invest in the business or take that money out as a shareholder or things like that. So gross profit margin is something that should be on every business owner's mind, and understanding how to calculate that figure, it can be difficult. So I would say definitely have a chat with your advisor or have a chat with us, so we can have a look at what actually goes into your business producing the revenue, and then calculating a gross profit margin percentage for you. Yeah, I've already sort of touched on all this sort of stuff. Fixed costs, again, things that don't change with revenue. Yep, variable costs. Yep, stock and material. Freight is a big one. Freight is a variable cost because it increases or decreases with the amount of stock you order. Marketing is a variable cost unless you're on some sort of marketing retainer with a marketing agency. So it doesn't really tie into gross profit percentage because it may not lead to sales. So it's not really a variable cost, but I'll put it in there because marketing spend does vary. Also, another a forgotten variable cost is transaction and payment fees. So any card fees or platform fees that are based on the level of sale activity, they're a variable cost as well. So understanding what the fee structure is for the payment platforms that you use, whether that be Square or Shopify or what else is there, Stripe, for example. Understanding those fees is very important because those fees do add up if your sales volume does increase. So understanding that fee structure will help you in budgeting for that expense. Okay. Another thing that needs to be a consideration when preparing a budget is seasonality. And seasonality is you can only get that from understanding the industry that you're in and then looking at your historical data and corroborating that information. So revenue is rarely linear. Depends on what type of business you're in, but maybe most product-based businesses or sort of the hospitality industry, it rarely is linear, right? So the only businesses that I can think of that are linear would be professional services or when you're doing project work where you're being paid a monthly fee or retainer work. So that's the only time revenue is linear. Other than that, it is subject to some level of seasonality. What else would I say on seasonality? Yeah, so just understanding the ebbs and flows of your business month on month. So practically, what does that look like? When you're preparing a budget, first thing I would do is I would go into my accounting software and I would print out my P&L month on month for the past 12 months and understand and look at the revenue and expense levels month on month. By looking at those numbers, you'll start to identify trends, and then that way it would allow you to budget a bit better. Whether if you have slower months, then in terms of revenue, that means you in the month leading up to that, you may have to look at your cash flow a bit more carefully and really put away a bit of a war chest to cover the fixed costs in those quieter months. So doing a budget really and understanding seasonality really does help you when it comes to cash flow analysis, which is what I was alluding to earlier. Understanding cash movements is going to be a very important thing, but it all starts with the budget. So common causes of seasonality: customer behavior, industry cycles, client budgets, other external factors, whether that be a pandemic or weather, whatever it is. What I would say on this is, if you're in a business or any business actually, understanding your sales data is very important. So whether that be looking at your Square platform, your Stripe platform, your Shopify data, if you're in hospitality, your point of sale system, really understanding the sales data that you are generating on a day-to-day basis or a week-to-week basis is very important because it does help with your budget for the next financial year and accounting for the seasonality. Any questions so far? I know I've been talking for quite a bit. Doesn't seem like anyone has any questions. Okay, I'll keep moving on. All right. Yeah, and this is just another example of seasonality. So it's very basic, but this will change based on the business. But identifying where months you won't be billing as much or selling as much will help you uh, uh, again manage your cash flow leading into those months so that you can be better prepared to weather those slower periods. Okay. Yep, I've already touched on this. Yep, reviewing your data for the past 12. Obviously, the more the better, because the more data you have, the more informed decision you can make. Um, and again, yeah, budgeting for uneven income. So again, this all comes back to the point of protecting cash flow. So uneven income, slower months, preparing for those periods by putting cash away and maybe reducing any reinvestment into the business and just keeping that cash there ready to pay your fixed costs as you head into those quieter months. All right, updating your budget. Okay, so why would you need to update your budget? What scenarios could occur that would require you to update your budget? First one, business conditions change. So I know, we're well past it, but again, large events that affect the economy, whether that be a lockdown or whether that be a freak weather event, those change the conditions. Or for example, the RBA increasing the cash rate 25 basis points last month, that will have an effect on business conditions because the ATO, not the ATO, the RBA is trying to curb spending and inflation. So they're increasing the interest rates in order to reduce inflation. So that will have an effect on business owners, and I imagine you will all agree with me on that. That you actually do see the effect on sales and trading conditions. I just have a question from Marshall Barker. So he's asking, so one item to be aware of when choosing your payment gateway is the strength of reporting they provide. Absolutely, Marshall. If I was you, I would be booking demos with whatever payment platforms you are or payment gateways you are looking to use for your business and asking them to show you what reporting capability they have. And again, they're going to be trying to put their best foot forward and sell you on their payment platform. But I would say the two main things you would want to look at when choosing a payment gateway. First one is integration ability into your accounting software. Okay, so that you can do the accounting for your business. So recognizing revenue and recognizing the cash coming in from those sales. The reporting ability of that platform and also the usability of that platform as well. So you as the business owner will be the one that's using that payment platform and logging into the portal. So you have to be able to understand it and be willing to want to log into it. The amount of times I've looked at a payment platform or a new piece of software and you go into it and it's just you don't know there's no user experience, then that really does affect the usability of it all. And then the last thing, obviously, the fee structure as well. The fees they charge you per transaction and things like that. Yeah, so I hope that answers your question, Marshall. But yeah. So in short, yes, absolutely. You definitely should be looking at the robustness of the reporting that they provide. Nicole has just asked another question. If you have annual or biannual subscriptions, is it better to budget in the month it's due or create a prepayment and holding bank account so the payment is split over time? So that's So from an accounting perspective, I would again create a prepayment and budget that expense on a month-to-month basis. So again, when you do a budget, you want to look at your result for that period, right? So yes, you may pay for something annually, but the attributable expense to that month is only 1/12 of that annual expense. So you don't want a month where you're paying for an annual subscription and there's a massive expense there, and then your P&L shows the loss position, right? You need to spread out that expense over the relevant period. So, and and the reason you say that is because, again, there are so many things that are tied to a budget, right? Whether that be KPIs that you're calculating for your team or your staff, or personal KPIs for the business, and then which flows onto incentives like bonuses and stuff like that. So it's not really fair to then put through an annual expense all in 1 month, which affects a stakeholder's KPIs for that month, right? So those type of annual expenses or biannual subscriptions, they should be spread out over the year from a budgeting perspective, because um, I think the principle stays the same, Nicole. It's attributing the expense to the correct period is what we want here, and so, but it has a different effect on cash flow, right? Because the cash will leave the business bank account. So that's why budgeting, you can't really use it as a cash flow tool. It can help you identify potential cash flow issues in the future, but really having a cash flow forecast as well is definitely key. And I imagine big businesses have both, right? A budget that they report to the board every month, and then a cash flow forecast that the CFO or the finance officer looks at on a weekly basis, right? Because we know that yes, you can invoice income in a certain month, but you might not get paid for 60 days. So really, you're showing a profit in the month, but you haven't received the cash yet. So you can't really use budgeting as a cash flow tool. That needs to be done separately as well. Hope that answers that, Nicole. Yep. So back on updating the budgets. Yes. Again, assumptions are exactly what they are. They're assumptions, right? So as you go through the year and you have real time data, you may want to change those assumptions. Okay. So updating the budget again. This all ties back to accountability um, and really committing to reviewing the budget and reviewing your numbers, right? So again, this it's really important. Doing a budget is pointless if you're not going to report against it, and you're not going to have meetings to discuss the numbers and the actual results versus budget. If you're not going to do that, then it's a pointless exercise. And then yeah. So again, and then the next point is having more accurate budget assumptions and forecast assumptions leads to better decisions. So as you get new information, you should update your budget, whether that be about spending or hiring or pricing, for example. Okay. And then, yeah, that altogether, that leads to just flexibility in the whole reporting process. And then just timing of when you should update your budget. I think you should be updating your budget anytime you receive new information. So that could be weekly, it could be fortnightly, but yeah, at least monthly. Reviewing the budget on a monthly basis will allow for more accurate budgets moving forward, which means more accurate information and more accurate decisions can be made. And if again, trigger events, so anything that happens ad hoc should be budgeted for as well moving forward. Okay. Okay, so now we are going to talk about sort of what to look at on a month-to-month basis. So this is probably where we're getting into more of a monthly management meeting cadence or process that should be put into place with the budget. Yeah, so these are just basic habits that if you are going to commit to sit down in April and put together a budget, then you should also be putting into place a schedule as to when you will report against the budget and who's going to be in that meeting, who's going to have discussions, who's going to be responsible for which key discussion points in that meeting, right? So just going off Nicole's point about being in big business, a big organization, what they generally would do, the CFO or the finance officer will prepare the numbers, the actual numbers. They will report that against the budget that was approved by the board. Okay, and then they would calculate the variances. So, did we reach our revenue targets, or did we overspend, or did we underspend? Why did we underspend? Why did we not make target, or why did we have more income than expected, right? And they will provide commentary on that, right? What happens after that is they would submit that report, that budget analysis to the board, and then the board will have a meeting with the CEO, with the chief executives, CFO, CEO about the budget. Okay, and then from there, that budget and that financial report will form the basis for the conversations moving forward. So, and I don't know, I know I gave an example of a large corporation, but this is applicable to all businesses of all sizes. So we generally deal with small business. I think this is a very useful tool for small business. Okay, just having that monthly meeting booked into the calendar, have all the people who are invited in that calendar invite as well, making sure everyone's going to show up, making sure there's no double bookings, and just really committing to a monthly or frequent schedule of that meeting is going to give you the best chance to succeed in your business. Okay. Yeah, and I've already touched on sort of what you're reporting on, the actual results. So practically what we're talking about here is, okay, so you get towards the end of the month, let's say, for example, the 28th or 29th of February, I don't know if it's a leap year or not, you should aim to have your accounting software or your zero file reconciled within 2 or 3 days of the end of month, okay? And then you theoretically, whoever is preparing the report, you should give them a day or two to prepare the reports, so the budget versus the actuals, and then they'll do their analysis, commentary, all that sort of stuff. And then a few days later, you should have your monthly management meeting or your monthly budget review meeting with all the stakeholders involved. And then that way, if you stick to this timeline, everyone has buy-in, everyone knows it's a serious meeting, everyone will show up and have buy-in and really engage in the conversation. Okay. And like I said, accountability is everything. Be accountable to yourself. Make sure that your staff or your team are accountable to you, and that there's buy-in. Okay, and buy-in comes from setting KPIs, discussing during the budget setting process. Whether that be career goals or goals for the next financial year, whether that be financial or development for your staff. Having those KPIs and plans and pathways, formalized and put into writing as a part of the budget process will have that buy-in from start, because everyone knows, everyone's on the same page. They know what they are being assessed against, and then they have a figure in mind to achieve that budget or that projection. So yeah, those are the habits I would say are most important when it comes to implementing a budget into your business. Yeah, like I said, it doesn't have to be, it doesn't have to be a 3-hour meeting, right? 30 minutes to an hour where you look at the results and then have a conversation about those numbers. Did we do well? Didn't we do well? What could be improved? Did we hit our KPIs for the month? And then what do we need to do next month to meet the budget, right? And then another thing is making sure that the meeting is recorded. There are plenty of AI tools that can help you summarize the transcript of a meeting, and then having action points that go out after a meeting, that go out to all the stakeholders of that meeting. We have a question. Stacey, are we able to get a copy of the slides? Absolutely, Stacey. We'll send out the copy of the slides and a recording of the webinar after we finish. Okay. Yeah, and just I know I keep harping on about this monthly meeting, but it is really important to sit down and have that meeting, because it can be put in the too hard basket quite easily. I imagine managing calendars of everyone involved is hard, but if you're strict with it and you make it a non-negotiable, then I think your team will really get a lot out of it all. Okay. Okay, so now I just want to touch on the difference between a budget and a cash flow forecast, okay? Because this is very important. So when we look at a reporting framework for a business, a budget, it falls into the monthly category. So you report against a budget monthly, and you maybe update it monthly, hopefully more frequently than that. But it is a month-end type of activity to report against. Yes, you prepare it for a year, but you report against it monthly. And on that point before about confusing cash with profit, this is where a cash flow forecast is definitely required. I know for a fact every finance officer, CFO in the world looks at a cash flow forecast at least on a weekly or even a daily basis, because they are responsible for managing the cash for the business and the cash flow, and really identifying when cash is low or cash is running out. Identifying a cash runway is very important as well, especially for tech startups that receive funding through a investment round or a seed round. Understanding your runway is extremely important because it tells you whether you need to go out and get more money, especially if you're pre-revenue. So um, going on to back to I think Jamie's question about whether if you're in the setup phase or the initial stages of your business, a cash flow forecast or a budget is useful. I think that's when it is most useful because it tells you how much time you really have, essentially. And I know it's a bit of a grim outlook if you have a short runway, but at least you know that it's coming and you can put in steps in place to address it. Okay, so budget, think budget, profit and loss. Doesn't take into account cash movements. Cash flow forecast is really drilling down into the timing of cash and cash movements. Okay, so like I said on the point of invoicing and earning revenue, yes, in the budget you may have invoiced something, but you wouldn't have received the cash for 30 days, 60 days, depending on what your payment terms are. And then also, I'm sure all of you will agree with me, getting customers to pay is a whole other beast as well. So having a cash flow forecast will tell you if you really need to start chasing your debtors as well. Okay, and a cash flow forecast is checked a lot more frequently than a budget. I would say a weekly review or a weekly cash flow meeting is very beneficial for a business. Just having cash flow front of mind um, is will give you a lot more clarity because, again, touching on the point of being a business owner and not wanting any surprises, because surprises leads to panic. So ensuring that we have cash in the right places at the right times will reduce all of that panic. Okay, so I think that's it for the slides. My final takeaways is a budget is, again, a very thought-provoking exercise. It allows you to put a plan in place, a strategy in place for your business, and a pathway moving forward into the next financial year or next few financial years. Okay, it is crucial that the budget is reviewed regularly, and the monthly management meetings or the monthly meetings to report the actual figures against the budget are committed to and done. Okay. I have a point here. Cash is king, right? And I imagine you all agree with me there. Cash is king. So having a budget in place is great, but it doesn't help you with cash flow. It may help you identify potential cash flow issues, but you want to know about those cash flow issues well before that monthly meeting, right? So having a cash flow forecast is also very important. And if this all sounds a bit foreign or not understandable, and it's a bit too much, really get the support early. Okay, so booking a call with us, we can show you practical examples through screen share or things like that. I might even do another webinar where I do a budget on an Excel for you all, okay, or a cash flow forecast, okay. But yeah, really, if you feel like you and your business will get a lot out of a budget, then and you don't know where to start or you don't know how to start, then please reach out to us. I just had a question here. Would you mind recommending an Excel budget template? Yeah, Audrey, you could literally go into Google now and type in budget templates. I'm sure we actually also have a budget templates as well that are available. I know Westpac has a very good one. Westpac is a partner of ours. They have a downloadable free Excel model. If you just type into Google Westpac budget template, for example, I'm sure something will come up. Okay, I'm going to pass it off to Kazi now, and then hopefully there are still some questions to be answered, and we'll do a Q&A at the end. Okay? Thanks, guys.
Thanks, James. I'm hoping that everyone, has something that they can take away from today's webinar. Now, just to reiterate, for a free call with either myself or James, just type yes in the chat. We're more than happy to reach out and see how we can actually assist your business moving forward. Now, just to kind of recap what we've covered today, we've talked about what a business budget actually is and how to build one from scratch, the difference between your fixed and variable costs for yourselves there and why that matters, how to plan for your seasonality, and so those quieter months don't catch you off guard, and when and how to update your budget so it stays useful. And those simply monthly habits just help to keep everything on track for everyone and business owners. So I think another big takeaway from today is a simple budget you actually review is worth far more than a perfect one that's just sitting in somewhere in a drawer. And I think, as James has said multiple times, cash is king. It's not just about profit on paper. It's about knowing when money is actually coming in and going out. Now, if today's session really got you thinking about, your finances and getting it all properly sorted, we do have an exclusive offer, which I'll run through for you guys shortly, which is exclusive for our webinar attendees, so all of you guys here today. So coming back to how Lawpath can actually support your business moving forward, just a reminder, we're pretty much a one-stop shop for thousands of Australian businesses. We can, provide you on-demand legal, accounting, and tax support. So you get very easy access to, our senior lawyers and accountants here. We're also, a one-stop shop for your documents, and we're not just documents and legal advice. We are also a document management platform here as well. So with an e-sign feature, so it's a nice and easy place for you guys to keep all your documents for your businesses. It's there when you need it, and without the high hourly rates that your standard lawyers and accountants will charge you. Right. We also can provide a service where, your traditional lawyers, where we can actually custom draft documents for you, and review any, agreements to protect your business and avoid your legal risk for yourselves there too. Now, we can also book a free legal or accounting consult for you guys if that's something you guys are interested in. Again, just type yes in the chat. We'll reach out to you. We'll follow up with a phone call, and we can get that booked in for you guys there too. Now, so coming back to the exclusive offer that we have for today's webinar attendees. So it's 30% off our tax plan. So our tax plan actually gets you a dedicated tax agent for your business. We take care of all your BAS statements, which are your business activity statements, your annual financials, and your business annual tax return. It's all taken care of. And as a business expense, it's only $240 a month. Right. We also do have an accounting advisory plan where you can actually book in unlimited 30-minute consults with our senior accountants like James. Right. So the most common package which we actually do bundle together are accounting and tax plan service. And look, if that's something you guys are interested in, just type in yes. We can book in a time to have a chat and run you through how that's actually going to assist you guys, all your companies moving forward and your businesses there too. Now, for any of you that are actually still currently just sole trading, we do have a separate sole trader tax plan. So again, type yes if that's you, and just mention that you currently have a sole trade. You're running as a sole trader business. Well, we can help you. We can help you with your business there as well. So these are just some of the accountants that you're going to have access to on our accounting advisory plan. So we've got Tim, we've got Patrick, Friday, Curran. Everyone here that we have has a wealth of expertise. So if you do have any questions, again, just type yes in the chat. Now, if you're not sure what you need just yet, again, book in a free consultation with us. No pressure at all. Just a chat about where your business is at and how we can help. Right. So Thanks everyone for joining today. Does anyone have any questions? We'll do a bit of a Q&A for now. Feel free to ask and we will answer.
Hello again, everyone. Final questions. Anyone? Type in the chat yes or absolutely if you'd like me to do a demo budget webinar. I think that would be a pretty fun exercise to do live on a webinar. What do you think? Cool, 2 people, 2 takers. Yeah, demo would be good. Yeah, awesome. I think I'm definitely keen to do that. I'll chat to the team and see if we can get that penciled in. Yeah, cool, awesome. Any final questions? I hope that if there's no questions, I hope that means that I explained it very well. I hope that's what that means. Alrighty, if there's no final questions, we'll just end it there. Everyone, enjoy the rest of your day. I will schedule in a demo webinar. Yes, there will be a recording, Bonnie. We'll send that out. All right, thank you, everyone. See you in the next one. Bye.